ladies and gentlemen, and welcome to another episode of Taking Stock Live right here on youtube.com/Kalila Ray and also on my website, KalilaReynolds.com. As you might have guessed, if you're new to the show, my name is Kalila Reynolds, and you're in tune to the #1 business and finance show in Jamaica. Today, we are breaking down the country's budget. Nigel Clarke, the Minister of Finance and the Public Service, delivered the opening presentation at the budget debate. What were the highlights? We're going to be going through it. But first, let me know where you're joining us from. I like to shout out all my viewers. I see some of you are joining us early. So where are you joining us from? Let me know in the comments. Let me know in the chat. And also, what were the highlights for you from the budget presentation? What were you looking forward to? What did you like? What did you not like? And if there was something that you were hoping would have been addressed and wasn't addressed, let me know as well in the comments. So here's a look at what's coming up in this program, followed by what's hot in business. How will the government pay for its $912 billion budget? Will there be new taxes? Finance Minister Dr. Nigel Clarke has opened the budget debate. We'll tell you everything you need to know about this year's budget, including what you really want to know about. And the analysts weigh in on the latest market developments. We'll hear their thoughts on Minister Clarke's opening budget presentation. Oversubscribed. Edufocal's IPO opened and closed in just 1 minute. Wow! And Stationery Office and Supplies and Dairymon trading results are out. How did they do? We'll discuss. But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
The Development Bank of Jamaica is looking to establish a venture capital fund. The bank said the fund will be financed through a $25 million loan from the Inter-American Development Bank, IDB. According to DBJ's Managing Director, Milverton Reynolds, capital for startups and early-stage companies in Jamaica is limited. They're seeking to fill that gap and are seeking proposals for a VC fund manager. The DBJ said the fund manager will be required to establish and manage the venture capital fund. They would also be solely and exclusively responsible for investment and exit decisions. In addition, the VC fund manager will have to actively seek deals, fundraise, monitor performance of approved investments, and report, among other duties. The job is open to both local and international VC fund managers. The deadline for submission of proposals is Tuesday, April 5 at 3 p.m. Energy Minister Darrell Valls says the conflict between Russia and Ukraine will not affect Jamaica's energy supplies. Mr. Valls said the island has enough fuel and is securing new deals to get more. Global benchmarks for oil passed $116 for West Texas Intermediate and $119 for Brent crude on Thursday before falling. The prices remain above $100 as uncertainty grows about the war in Ukraine. Mr. Valls said that there is adequate storage capacity both on the island and offshore to secure the country's fuel arrangements. He noted, however, that the government cannot predict what the prices will be. Cygnus Credit Investments now owns 93.66% of Puerto Rican private credit company Accrescent Financial Corporation. The deal was approved by Puerto Rican regulators on February 18. According to SCI, it paid just over $21 million for the shares. AFC reportedly has a private credit portfolio of roughly $60 million and assets under administration of at least $125 million. Chairman of Cygnus Capital, Milton Brady, said that the acquisition is part of the company's strategy to expand across the Caribbean. CIBC First Caribbean has removed fees on transactions at its ABMs. According to the bank, all ABM transactions by its customers at its ABMs will be free. The free transactions include withdrawals, mini statements, and declined transactions. CIBC customers will also still be able to pay bills, check balances, and make deposits for free. The bank said the decision was made to provide relief to financially vulnerable households that have been heavily impacted by the COVID-19 pandemic. Haiti will receive $45 million in grant funding from the Caribbean Development Bank over the next 5 years. According to the CDB, the funding is part of its new country strategy for Haiti, following the assassination of President Jovenel Moïse last year. Haiti has faced severe challenges, exacerbated by a 7-magnitude earthquake in 2010. The earthquake killed more than 200,000 Haitians and caused billions of dollars in damage. A 7.2 earthquake hit the country in 2021, resulting in more infrastructure damage and loss of life. The country also continues to have severe floods each year. Since Haiti joined the CDB in 2007, the bank has allocated grants totaling $209 million for education and training, community-driven development, and agriculture, environment, disaster risk management, as well as sustainable energy.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart.
Our key word for 2022 is consistency. I've told you before that you can start investing with as little as 1,000 Jamaican dollars, but the key to growing that into actual wealth is consistency. So here's what we're gonna do. Step 1, open your investment account. Step 2, set up a standing order or a salary deduction with your employer to fund that investment account every month, so that at the end of each month, you have money to buy stocks. Step 3, you're gonna watch my show, Taking Stock with Kalila Reynolds, every Tuesday at 8 p.m. on YouTube for news and analysis on the stock market. And if you're completely clueless as to how to get started, well, you take my Investing for Beginners masterclass at KalilaReynolds.com/masterclass. 2022 is gonna be your year. Let's get this money. This segment of Taking Stock is brought to you by Bulwark Insurance Agency. Insurance made easy. Let's get this money. So I see a number of you joining in live. Let me shout out our early viewers. Where are you from? I see Richie Tech joining us from Clarendon. LeVar Henry says Mandeville checking in. Shout me when you see me out the road, LeVar, in Mandeville. Lanesra tuning in from Waterford. Steve McCullough's all the way there in Toronto, Canada. LeVar Sanchez is in Portmore. King K also in Portmore. Angela McLean says, good night, Connecticut. Hey, Connecticut, how you doing? How's the weather over there? Graham Jervis says, no new taxes. Yes, that's definitely one of the highlights of the debate. We're going to be talking about that shortly. And Dwight, big up Dwight Walker there in Havendale, and Orville Reeves in Spanish Town, Roger in Philadelphia. Let me know in the chat where you're joining us from. We're talking about the budget this evening. Let me know as well. If you listened or watched, what were the highlights for you? What were you most anticipating? Did he hit the right notes for you? What are the things out of what he did say that you liked the most or liked the least? Let me know, and we're going to be analyzing that as well. Hit that like button on the YouTube channel and the Facebook page as well. Like this video, it helps us with the algorithm. It helps YouTube to recommend this video to other people like you who may be interested in what we're talking about. And of course, subscribe to the newsletter at KalilaReynolds.com/newsletter, where you get alerts, promo codes, news, and a bunch of cool stuff directly to your inbox. Let me introduce our guests for this evening. It's my pleasure to have this esteemed panel today. My friend and financial analyst, Dennis Chung, and we're also joined by President of the Private Sector Organization of Jamaica, PSOJ, Keith Duncan. Welcome, gentlemen.
Thank you, Kalila.
Hi, Keith.
Let me see.
Dennis, good evening to your listeners. Viewers, sorry.
Yes, let me actually say welcome back, because you've both been on this show before, and it's my pleasure to have you again. Well, let's start with you, Dennis. What were the highlights for you? What stood out? Give me just two, and then we can continue from there. Top two.
Yeah. Well, first off, I think that it was a good recognition that what we need is growth. So the fact that there are no new taxes, I think if you talk about two, and the second one I'd give you, although I have more, is the fact that he discussed the matter of combined with the whole thing of the information about the bank fees and how necessary they were, and the no fuel tax being rolled back. It shows that there's fiscal discipline being practiced. And that is really what has guided us through the last 2 years. Rather than a rush to do something for short-term gain, is a look at long-term benefits.
Right,
So
because
those
a
would be
lot
my
of
two.
people have been clamoring for that issue of the gas tax, given where we are with gas prices today, oil prices rising. This has been a contentious issue. You think it reflects fiscal discipline, so you don't see where there could have been any room at all to maneuver with the gas tax?
No, I wouldn't have. I've always maintained that it should not be rolled back. And the reason for me saying that is because if you're in a situation where you are coming under pressure in the economy, and the fact that productivity has been low over the past 2 years, if you reduce the fuel tax and the demand for fuel goes up, then you're going to put pressure on the foreign exchange rate, and that's going to make it worse across the board. So the best thing to do is, as was done, look at reduction of duties on electric cars. I think there should be removal of duties on renewable energy equipment, and also beefing up your public transportation system. So the best thing to do is reduce demand and reduce consumption of the imported oil.
Did he address that third one about the public transportation system? I don't recall hearing that,
No, he
unless I
didn't.
missed it.
He didn't, but he should have, and they should have as a government.
Keith, what were the highlights for you? Give me your top two.
Well, coming out of the last 2 years and heading into this Russia-Ukraine crisis where there's so much uncertainty, and the fact that we have been able to maintain, as Dennis says, fiscal sustainability and fiscal responsibility through this period, and projected to do so over the next couple of years with the debt to GDP projected to close the year at 96.3% and to fall to 87.2 at the end of the next fiscal year, and 80.1 at the end of the following fiscal year. That shows fiscal sustainability. The second one for me was public sector transformation. This has been long outstanding, and a comprehensive approach that has been taken by the Minister of Finance and the government in terms of first doing their overall compensation review and rationalizing the salaries in an equitable way, and reduction of allowances and salary scales, and also addressing the efficiency of the whole compensation regime. Now it means that we move out of the range of a 9% wages to GDP, which in of itself is a challenge. However, at the end of the day, we have to achieve public sector transformation and get more efficiency, and that's what we want to see, some more efficiency measures coupled with compensation alignment in terms of efficiency, and also in terms of the wage increase that is projected over the next 3 years, because our public sector is grossly undercompensated. So you have to bite the bullet at some point in time, right? However, it does cause that fiscal challenge, but the overall fiscal sustainability of the budget and over the next 3 years is intact according to the projections that we have seen. The second area is the area of growth. And where is it that we are projecting for growth? Because he was very clear that Jamaica has underperformed over the last 60 years, underperformed our peers. We're behind where we were in 1970. And how do we get growth? He spoke to a couple of areas, but I still would like to see a little bit more on growth. He spoke to the integrated resort development, targeting $1 billion investments and some structured fiscal incentives. He spoke about the SMEs and really looking to get SMEs going with about a $23 billion package between private equity and loans. So, in the areas of operational efficiency, reforms, there was that area of public sector transformation. Also the customs reforms to come, because we know how inefficient that area is, the income tax rationalization of all of that. I mean, so these are big ticket items. However, we still want to see a little bit more on the growth side.
A little more of the what?
On the growth side.
Growth, yes.
On the growth,
yes.
What
that
are those?
Just been so elusive. Every time we're like right on the cusp, bam, something happened. Hurricane,
Right.
COVID.
Right.
It's just eluded us. But he did defend your industry though, Keith, which I found, well, I wouldn't say interesting, because this has been his line from day one when it comes to banking and banking fees. He's opposed to regulating banking fees, despite the outcry by the public, given the increase in fees by two major banks recently. They had to walk back.
Yeah.
I'm not saying your bank, Keith, because JMMB is one of the better banks where it comes to fees.
Right.
And full disclosure, JMMB is one of the sponsors of the show. But
Right.
but apart from that, I also like how you guys do business.
Yeah.
But on that
Yeah.
point, there was this issue of, not so much an issue, but he is
No.
now encouraging people to open these KYC accounts, the Know Your
Yeah.
Customer accounts, which are
Yeah.
supposed to be easier to open,
Yeah.
fewer requirements. Tell me about that.
Well, it's the Minister of Finance did speak to the retail banking as a very expensive operation. One, because of the high level of compliance requirements that we have, and secondly, it is so expensive to run brick and mortar. Thirdly, the huge security costs, and just how inefficient it is to run a branch. And therefore, he was speaking to the fact that retail banking, as a member of the overall financial groups, their profits are like 20 to 25% of overall. So when you see that big headline number, retail banking is not making that amount, not making that significant contribution to overall group profitability. However, and that is, and also the average return on equity is 9% on retail banking, which is significantly lower than other publicly listed companies. So banking is an expensive venture. This is the point he was making. However, he has to protect, and we should protect the most vulnerable. And therefore, you have these the KYC accounts that it's a low requirement KYC accounts where you only require a TRN and a national ID to open an account. And this is for those who are low risk because they don't have a huge amount of money running through their accounts, and therefore they'll be classified as low risk. And therefore, it's easy to conduct business, and therefore there'll be no fees on these type accounts, which is really good. And then the CBDC, the digital currency, which is another
Yes, another
area.
sexy area.
Right. So therefore, the two areas of the KYC accounts and the CBDC and incentivizing that behavior, that's about financial inclusion and getting the unbanked into the formal economy so that we can get those flows and people can get into the formal economy so that they can now be able to access services from the private sector and the public sector and be able to build their own credit so that they can now, become that, be a key driver in growth, moving from just a retail to maybe a micro business to a small business to a large business. You know what I mean? So it opens the doors. It really is. And it's called financial inclusion.
So there's an incentive to open both a CBDC wallet and or a KYC account. $2,500 the government is going to give you if you open either or both of these types of accounts after April 1. Can you tell me the list? Do you know how many institutions are currently offering this, Keith? You can start with yours if you want. Where can I go to open this special account, and what do I ask for?
I think most of the financial institutions do. I think JMMB, Sagicor, NCB, I think Scotia too. Those are the ones that I know of, but I know that this has been a feature for a while. And I know that maybe the other banks also have this account in place. So it is no, to use the ATM, no fees. You do transactions in the branch, no fees. So therefore it is really targeting the vulnerable. And I think this is a theme of the budget is let's protect the vulnerable. Let's not put wholesale kind of changes to tax or any kind of processes or benefits. Let's target the vulnerable and let's take care of the vulnerable because those are who really need the support.
But there are limits on those types of accounts, but at least it's a start and it gets people into the formal banking system. Yeah. Dennis, I was just listening to some commentary on the budget as well on the radio. And one of the points that one of the panelists made was that, yes, this is great that we have these KYC accounts for individuals, but take it a step further now. allow businesses to be able to open limited accounts. This would benefit micro businesses, especially since it is difficult to open a business account. What do you think about that?
I don't know if I agree with that.
Which
I
part? That is
about
difficult to open a
businesses.
business account?
No, about businesses being open to being able to have those KYC accounts. I think businesses, once you get into a business, that you should have certain standards that you maintain, because um, it's much easier to get into activities through business accounts, and the standard has to be maintained. So I don't think I agree with that. Um, and the truth is that we need to, we have this tendency in Jamaica to bring our businesses down to a standard rather than up to a standard, and I think that's what I'd want to do, to maintain it there. I agree, however, with the KYC accounts for individuals, because the fact of the matter is that some individuals, it's very difficult for them, and with the small amount of money that some people have, I don't even know why we bother with KYC. It actually costs more to do the KYC than maintain accounts at that level. But for businesses, I think there should be a standard for businesses. So I don't necessarily agree with that.
So I see quite a few comments in the chat having to do with the CBDC, JAM-DEX, and also people are very curious about the new notes, especially the $2,000 note that is coming. I want you guys to address this concern about the CBDC. Where is it? I'm trying to find the comment here. But basically, one of the persons in the chat said, "Why are we printing new money when we are focused on going digital and going to the CBDC? We want to transform into a digital economy, basically." What do you think about that, Keith?
Well, I mean, there is always going to be a need for cash. I mean, in countries that are more, they're in countries where they have digital, I mean, more highly digitized than we are. You do have a need for cash, and therefore, CBDC, where the beginning stages, the early stages of that, and we want to incentivize so people can use their mobile wallets to do business. That's the direction we'd like to go in. But at this point in time, I don't know any country that is cashless.
Entirely cashless, yeah. And then the physical notes that we do have, they don't last forever, right? They get the wear and tear, they get torn, they get mashed up, they get faded after a while. You do need to replace them. So yes, although we're going digital, we still do need physical cash for who knows how long, until that transition happens in how many years into the future. But for right now, we still have a need for physical cash. Dennis, what do you think about CBDC, JAM-DEX? I mean, apart from the logo and the name, what do you think about the actual functionality of it?
I think it's excellent. If you think about it, a lot of us have been basically paying or transacting business digitally for a while. I mean, when you use a credit card, for example, when you do electronic funds transfers, I can't tell the last time I went into a banking hall. It has been years, definitely maybe 10, 15 years since I've gone into a banking hall. So we've been doing it. What this does now is that it says, a lot of people have been out there. So if you have 100 notes out there, and CBDC is now saying, listen, I really don't need 100 notes out there. Let me just do 80 notes, because the fact of the matter is that the circulation of the physical notes, as the economy gets more and more digital, is getting less and less. So you don't really need it. So, you look at what you need in terms of physical notes and the lifetime you'd normally have on them, and say, I still want to maintain my money supply. But the fact of the matter is that a lot of people now, are doing electronic funds transfers. I mean, I can't tell the last time I signed a check, or something like that. You just go on and, you go on the banking platform, and the banking platforms are well developed, and you just transfer your money and it hits right away.
And the beauty of it to me, Dennis, is the part that the minister explained, no fees. So you transfer it, it's supposed to be exactly like a cash transfer, which when I hand you money physically, I don't pay a fee to hand you money physically. So it's supposed to work like that. And there are no fees associated with making this type of transfer, as opposed to if I'm doing an RTGS or an ACH online, there will be fees associated. But Keith, isn't that a threat to your industry, to banks? Because that's
Oh, no,
part
not
of the
at
way
all.
how you make money.
No, not at all. I mean, that brings efficiency. It reduces the cost of operations. It's very expensive to handle cash. So if we have all our customers transacting on through digital platforms, that is actually very good for us because we can reduce the high touch areas and move to digital and really look to provide the services that people really need. You know what I mean? And in terms of value added transactions, kind of thing, loans, facilities, capital market activities, equity transactions, that is where we should be, focusing on value added transactions and not on expensive manual transactions. And all this does is just replace the cash with digitized cash.
So I see somebody saying online. So the finance minister also debuted the new look of the Jamaican money with some new face. Well, not new, bringing back some familiar faces to the banknotes and doubling up on some of the national heroes on the banknotes. And we're also going to be getting a new $2,000 note. A strong link says, I think to continue with a new $50 note is a waste of time. A $10,000 note would be better. Did we need a new $2,000 note, Dennis? And should we have gone $10,000 instead?
Yeah, I think a $2,000 note was definitely needed. A 10,000, I don't think so. I mean, I think the 5,000 is enough. And remember also that we're talking about a situation where we're having more and more digital currencies now, right? Well, digital currency and electronic transactions. So you really don't need any higher value notes, because most of your transactions, the $5,000 notes to do well. As to the new notes and the new faces and thing, I mean, I won't comment on that. That's for Kingsley Cooper from Pulse to comment on, because more like a personal than concern. Because whether you have the picture of one person or the other, an animal or not, is the value of money I'm dealing with. So, it's a good look though.
Yeah, Mike says, I don't want to see a $10,000. Our money would be worthless. You remember in Uganda and Venezuela, there's a psychological message when you have these large denominated notes. I remember when the 5,000 was introduced, people were like, whoa. But when you really think about it, even a $10,000 note is not equivalent to 100 US. It'd have to be a $15,000+ note to equate to 100 US. But then how many of us really do physical cash transactions with those denominations? So how useful would it be to the day-to-day person? I think the $2,000 has much more utility in today's world. We have to talk about the big one. We haven't even touched the issue of no new taxes 7 consecutive years. I think that's an impressive feat given the challenges that we've faced over the past, especially 2 years, and all that we've come through over the past 7 years plus. So let me hear your thoughts on no new taxes and how we're able to sustain this, Dennis.
Definitely, I agree with it. I've always been saying for a long time now, even when a lot of taxes were coming on, that I think it was a wrong move. You can't grow an economy by putting burden on the people who are supposed to produce. So, if someone's is seeing more and more taxes, you're taking more money out of the productive sector, you're not going to have growth. I mean, I'm one proponent for a very long time that I think even the asset tax at the banks should be reduced. The money in the hands of government actually works less than in the hands of the private sector. And therefore, I think that one of the reasons why we're able to see, for example, not such a great impact and maintain stability over the past 2 years is not necessarily because of what we've done just over the past 2 years, but we've set up our fortunes that we have now by these 7 years of new taxes. Leaving money in the economy, leaving it for work to work. It creates predictability. I remember the days when you were assured of taxes coming on. Investments used to be for like
Yes,
a
we used to watch
1 year
the
horizon.
budget debate just to hear what are the new taxes. What will they lick us
And
with this year?
people, yeah, and people used to say, "Boy, I have to make my return over next year because I don't know, I'm not sure what's gonna come next year." So I think it's a great thing to maintain that, you know.
Mhm.
Keith?
I totally agree. In terms of, and Minister of Finance did say, let's leave the money in the hands of the individuals and the private sector to invest, to spend the way they see fit, and that will drive growth in the economy through spending in the economy. And I think that is the direction of the government. We're coming out of, we would have lobbied the Minister of Finance for the reduction in the asset tax on the financial sector, because actually in the 2021 budget, it was slated to be reduced from 0.25% to 0.125%. And we actually had a conversation with the Ministry of Finance as a financial services industry and said, we think that you return that to you. You have given it to us in the budget, and we gave it back and said, Jamaica is in a crisis situation now. We will forego the reduction in the asset tax because Jamaica, and this was right when we were in the middle of lockdown and everything. And and we agreed with the minister, and he was grateful, and they acknowledged that in the budget. But we think at some point in time, and we were hoping that they would start to gradually reduce it, maybe starting this year, because it adds significantly to the cost of doing business. But I agree, but there are priorities, and the government has to make their decisions, and they have made their decisions.
So the banks are eagerly awaiting the further reduction in asset tax at some point in the future. It didn't come in this budget. What I was waiting with bated breath to hear was what they're doing about PAYE, because this was the government that came into power on the promise of greatly reducing income tax, which they did. So they abolished income tax for everybody who earns less than $1.5 million. And ever since then, I have been waiting to hear when are they going to abolish income tax entirely. Do you think that at some point it would be practical to do that?
Well, it only can be practical when you have the revenues to be able to sustain it. And I think once we start showing some real growth in the economy, I think we still have a little, there's a significant amount of uncertainty in front of us. We're not too sure exactly how this Ukraine conflict is going to play out, and what will be the impact on the global economy. Will it slow it down? What will be the impact on travel, on tourism? Those are still a lot of the unknowns. So I believe the Minister of Finance should have done his best at this point in time. But the most important thing is that we are comfortable that we can ride through a crisis. We did it in COVID, and we're facing another crisis. And while we might be nervous and we know business conditions could deteriorate, we have a level of confidence that we can ride it through.
Yeah, so basically we should be grateful for what we get, which is no new taxes this year. I think that's a good note to leave it on based on all the troubles that we have had to endure over the past 2 years. Before we go, though, I have a question from a viewer for you, Keith. JJ wants to know where you got your shirt from. Is it a custom one-off or from an existing company? Your Jamaica shirt.
Yeah. Where's my Jamaica?
Oh, yeah.
I think he got it out of the budget. That was just presented.
No. My wife bought it for me at Sun Island. I love the Jamaica shirts.
Sun Island. All right. So free promo for Sun Island. Get your Jamaica shirt. Thank you so much, Dennis Chung, Keith Duncan, for joining me this evening.
Thank you very much, Anita. Thanks for having us.
All right, Keith.
And sharing your thoughts on the budget. So let me ask you, our viewers, to take our poll for this evening. It is on my YouTube channel. You can go to the community tab if you're using the app. It will probably show up on your feed at some point in time, but you can go directly to the page, directly to the channel, and go to the community tab to take today's poll. The link is in the description box here on YouTube. And here's your question. What was the highlight for you from Finance Minister Dr. Clarke's presentation, his opening of the budget debate? The $2,000 banknote, no new taxes, $2,500 incentives to open KYC or CBDC wallets, loans for small businesses, or other. So let us know in the comments and also take our poll. Up next, it's your market recap, and we've got the analyst standing by. Of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy.
Time now for your market recap. The Jamaica Stock Exchange declined, with the combined index losing 1,700 points, or about 0.5%. 114 stocks traded across both the main and junior markets of the JSE for the week ending Friday, March 4, 2022. 49 advanced, 59 declined, and 6 stayed the same. 223 million shares changed hands on the Jamaican dollar market, totaling a whopping $2.4 billion. Carrera saw the most trading activity. It took up 28% of market volume. The stock gained 36 cents to open this new week at $8.67. No surprise here, FESCO traded the second highest volume, with people buying nearly 56 million shares in the company. This includes 38 million shares sold by a connected party to an executive director and a connected party. Additionally, investors have been rushing to the stock with the expectation that the company stands to benefit from the rise in oil and gas prices. FESCO also had this week's biggest gains, up nearly 58%. The stock's price gained $2.90 to open this new week at $7.92. The stock was also the month of February's second biggest gainer, up 66%. Wow, FESCO had quite the ride last month. And Wigton Wind Farm ordinary shares rounded out the most traded, taking up 7% of market volume. The stock lost 2 cents to open this week at 52 cents. Now let's see who else had the biggest gains for the week. Main Event Entertainment Group came in second to FESCO as this week's biggest gainer. The stock price jumped nearly 42% to close last week at $7.50. And third on the list for February's biggest gains, Main Event Entertainment Group stock advanced by nearly 49% to close last month at $5.93. And rounding out our biggest gains, SSL Venture Capital Jamaica is up 35% to open this week at $1.80. However, SSL Venture Capital Jamaica rounded out the biggest losers for February, down 21%. On the losing side now, Caribbean Assurance Brokers was the biggest loser, down 29%. The stock closed last week at $2.29. Paramount Trading Jamaica fell nearly 16% to open this new week at $1.67. And rounding off the week's biggest losers, Mayberry Investments lost 14% to close at $5.94. Now here's a look at some of the other highlights of the month of February. The main index declined by nearly 3%. The junior market advanced by 6%. The financial stocks declined by 3%. And the manufacturing and distribution index advanced by 2%. Margaritaville Turks USD topped February's biggest gains. The stock price rose nearly 67% to close last month at 20 cents US. On the losing side, Raider Jamaica dropped nearly 29% to close the month at $3, and KLE Group dropped 25% to close last month at $2.20. This segment of Taking Stock, The Analysts, is brought to you by Proven Wealth and Ideal Securities Brokers Limited.
Welcome back, everybody. Great to have you back for the next segment of Taking Stock. My pleasure to continue hosting this show with you. Let me take a few more of the comments from the chat before I introduce our guests for the next segment, our panel. Daniel Gordon wants to know, why am I getting a $2,000 note and changing the image of the money? So we're going to have to recap some of the highlights from the debate, because he did explain why the need for a 2,000. So he basically, the finance minister basically outlined that there you have the 1,000, you have the 5,000, but he believes that there is a need for a denomination in between the two, because 5,000 kind of big, and then the 1,000 these days kind of small. So perhaps there's this need. Let's see. What do you think? Do you think we have a need for an intermediate note between the 1,000 and the 5,000, and then changing the images on the currency as well? What he explained was that many of our national heroes that were on the original currencies, like the smaller denomination, the $1, when $1 used to be paper money, when 50 cents used to be paper money, these people were on these notes. And then these notes were eventually demoted to coins. And then some of the coins no longer exist, like a 10 cents coin and anything less than $1, those what used to be red money, those no longer exist. And so those heroes who were on those coins were no longer represented on the currency. So now they're updating the new currency with the images of all the national heroes. There was also an issue with the coloring as well, the colors. So there was a complaint that like the $500 note kind of looked like the $5,000 note in terms of the color. And if you're operating in a situation with low light, like at night, you could get the two bills confused and accidentally give somebody 5,000 when you mean to give them 500. So the new notes are very distinct in color. So that's part of the reason for that. There was a lot to talk about, including never know Nigel is a big artist, you know. Oh, Marky G, big artist, Nigel Clarke. Well, let's talk some more about it with our analyst panel this evening. We have with us Dwayne Taylor. He is the assistant manager. He's senior wealth advisor at Ideal Securities Brokers Company. We also have assistant manager of private equity at Proven Management, Julian Morrison. Welcome, gentlemen.
Hey, Kalila.
Julian, we're here for our radio this morning. It's on. You're getting famous on me, man.
No. That was
purely
No, that was purely by chance.
I heard you and was it Theodore from JMMB?
Yeah, man. Theo.
Another one of our analyst regulars as well. So let's start with the budget breakdown. What stood out for you, Dwayne?
Hey, Kalila. Right. So, I mean, it was a very interesting presentation. A lot of positive points made by Dr. Clarke. I think the standout points that for me was obviously no new taxes. That's something that, most persons sit on the edge of their seats waiting for, especially with how the past 2 years have been for a lot of Jamaicans. That would have definitely been a concern. But happy to hear that there aren't any new taxes. The implementation of the JAM-DEX system, or at least this new digital currency, is exciting, because I think if anything we've learned so far, especially with what's going on in the world, with even that crisis between Russia and Ukraine, is that when it comes down to fiat currency, sometimes it can fail you. When we look at persons being unable to access their money due to you, and I'm talking about Ukraine citizens being unable to access their money. And when we look at Russia and the fact that, their dollar, because of the sanctions being placed on them, is pretty much worthless. It just shows you that we are heading into a day and age where digital currency has a role to play, especially when it comes down to access to your money, because a lot of persons are unable to access the money as well. You think about the bank runs that are taking place overseas right now. Persons want to get access to their money and they're unable to access it. So I think with Jamaica embracing digital currency and even the government incentivizing persons to participate, get yourself, access to this program, I think it's a step in the right direction. And even though we're not where we should be, it definitely shows that we're making the right steps to getting there. So I would say the taxes and the incentive that Dr. Clarke spoke to were really good points. And then also the gas. Well, I want to say almost it's the $2 billion stimulus. I found that to be interesting. Obviously, he said he would get into further detail about how they plan on apportioning the money and the persons, the demographic that they're targeting. But it'll be interesting to see how that will play out, who really benefits from it, And I think it's a step in the right direction, because if I'm sure we can all say that gas has been the price for gas has been spiraling out of control. So any form of subsidy or assistance would definitely be a plus, even for those that depend on fuel a lot for their jobs.
Yeah, a lot of people were expecting to hear something about gas prices, if the government would intervene in some way, and that may have been a big disappointment for people who had that expectation. But no relief there, at least not for now. And Julian, what were the highlights for you?
So I'll just continue on the same point in terms of looking at fiscal support. 2 billion might not sound like a lot, but the thing with a budget is that it gives us a baseline to work with. It's not set in stone, because throughout the fiscal year, the government actually has the ability to do supplementary budgets, meaning that they will announce adjustments down the line if necessary. So the budget is really to set the context for the fiscal year, to chart the course in terms of setting the direction and where the government's head is at. And within that context, I just want to highlight some of the ministries that got a greater share of resources, or is to be allocated a greater share of resources in terms of rank according to allocations for the year. So at the top we have Ministry of Education and Youth at 13.56%. Then there's Ministry of Finance at 12.52%. Then there's Ministry of National Security at roughly 11%. And then there's Ministry of Health and Wellness at 10.75%, followed by the Ministry of Economic Growth and Job Creation. Many persons don't know what that is. So the Ministry of Economic Growth and Job Creation covers water, works, environmental matters, housing, land, and climate change. So those are the ministries that are ranked in top 5 in terms of expenditure. So clearly with the COVID shock, we would have to look at education and trying to cover the gap there, because we know some of our children might be behind. And there's also the digital divide that we need to address, because in preparing our children for the 21st century, we're going to need resources to equip children and basically retool our education system to be more aligned with that. Of course, Ministry of Finance helps to track the payment of debt, right? Debt is approximately 33.7% of how much you have to pay of the total budgetary resources, which is significant. But the thing is, we're coming from a place where it was more than half for many years. 60 cents of each dollar we earned as a country had to go just to pay in debt, which is why we had so many potholes and infrastructure popped down and people can't get paid what they deserve to be paid in terms of public sector workers, because so much of our resources had to go strictly to debt payment. So the fact that it's just 33.7% needs to be put into context. So that's a good place. Our debt to GDP is set to hit 96.3% for March 2022, which is good, because the sustainable debt level set by IMF and the World Bank is 60%. And we want to reach that level by fiscal year 2027, 2028. And this is coming from a place where we're at 142% in 2009. And we were in those levels for many, many years. So the fact that we can get back to double-digit percentage in terms of 96%, that's a much healthier level, but we'll have much further to go. And if we can go back to hitting a fiscal surplus, where we're earning more tax revenue than we are spending, it will also improve our prospects for economic health by a great extent. So the projection is 0.3% by March 2022, which doesn't sound like a lot, but a surplus is a surplus. We can grow it.
Great points,
so those are the
Julian.
highlights.
Yeah, I want to come back to a point that Dwayne raised as well regarding CBDC and looking at the possible risks in or risk to adaptation. When you look at what's happening in Russia, Ukraine, like you pointed out, and people not having access to digital banking services, cash is king in those situations, and those are exactly the types of fears that that cause people to not adapt digital as fast as they could. And so when you look at here in Jamaica, cash is still king in Jamaica, even though digital transactions have been increasing. We still have majority of transactions here being conducted in cash. So let me ask you, the incentive is $2,500 to open a CBDC wallet, a JAM-DEX wallet. They will give you 2,500 Jamaican dollars in that wallet. You think that's enough of an incentive to get people to overcome their fear of all your money disappearing? 2.5?
I mean, I don't want to give it the title of free money, but it is what it is. The 2.5 obviously in the grand scheme of things, really can't impact maybe like your market basket or something to that extent. But the fact is, the government has taken the move to say, hey, we want you to get on board with this. We think this is important for Jamaicans to have, and we will give you an incentive in doing it. So I think to debate if it's good or not is probably not the best angle to look at it from, but just for Jamaicans to embrace this new normal, to try out this opportunity to be able to do transactions without having to rush to an ATM or worrying about your card failing at a point of sales machine. Dr. Clarke did a test. Well, he was just highlighting, being at the barber and sending $500 to the barber for, money that he owed, and how simple that transaction was, as, taking out your phone and, sending the money. I mean, obviously, I think a lot of Jamaicans are accustomed to utilizing their online banking as well. A lot of persons have been embracing that, and a lot of the local banks have been heading towards, encouraging persons to do ACH or RTGS, doing those online transactions. So I do think that this is just a step in the right direction, where it's becoming a lot more simpler to do transactions, getting money from one point to another. So I think it's a good move. So yeah, I would definitely say that despite the amount of money, it's still a step in the right direction.
So I see people in the chat saying yes. Mikhail says, I see a lot of people ready to sign up, 2.5 or not. Leon says, look, Link, a lot of people signed up for $500 bonus. Imagine $2,500 bonus. That would be a great move. And I see some more comments along those lines. I was trying to open up the money to show you. Okay, I think I can do that now. Let me share my screen for those of you who haven't seen what the new banknotes, the new money will look like. I want to allow you to get a first look if you haven't seen it just yet. So here we go. This is what your new JMD will look like. So you have your $50 notes that has on, who's that? Paul Bogle and George William Gordon, I think. Marcus Garvey's on the 100, Nanny and Sam Sharp on the 500. You have Norman Manley and Bustamante on the 1,000. Am I getting confused? Michael Manley.
No, you're doing well.
Manley,
You're right.
And then Michael and Siaga on the 2,000, the new note, and then on the $5,000 bill. Who are those people? Remind me. Is that Shira and
Shira?
That's Shira, and that is Donald Sangster, Sir Donald Sangster.
Donald Sangster, yes, that's the other
correct.
person.
Right.
So these are what your new money will look like.
You can't tell anybody you come from Belize again. You're Jamaican now.
Yeah, I didn't do too bad, did I? To identify, and I didn't go to school here, but I have kids who went to school here, and I have to, help them out with their homework. So I had to learn them same way.
Top notch.
Good job, Khalilo.
Thank you very much. Okay, so let's look at some market developments for the past week. First of all, Edufocal's IPO. Actually, even before that, a lot of people have been asking about JFP. Do either of you know what's going on with JFP? They haven't announced the allotments just yet.
I haven't heard anything.
You haven't heard?
Same.
No updates?
No.
I don't know either. So we're just waiting to hear the allotments on JFP. All right, so Edufocal IPO opened and closed in 1 minute. I'd say as expected. Was it expected, Dwayne?
Absolutely. Absolutely. I think I think it kind of brought us back to 2018, 2019, when, you know, a lot of junior market listings were just closing within a second. So, you know, it was expected, especially with the amount being raised, you know, similar to Spurtree and JFP, the amount, I think this was the smallest amount for the year so far. But you know, there is a lot of attention behind it. I think, you know, there's been a lot of work being done by the CEO and the team that is backing it, just bringing, you know, not just notoriety, but letting the market space know about what Edufocal is, who they are, and what they're trying to achieve. And I think, especially with you know, schools being reopened, it was just like it was the perfect time for them really to come to market. So I'm very optimistic for them. I'm excited to see how the year plays out for them, and I think the IPO did what it needed to do. You know, clear off some of that debt and look to scale the business, well, improve on the business moving forward. So I'm not surprised at the take up and it being in within the same minute, I want to say. So yeah.
And Julian, for you?
Well, the offer from the side of the public was pretty much small. It's just 80 million J dollars. But in terms of the company and the momentum behind it, it's a very compelling growth story. We have a company that is really a Jamaican bred tech firm, which is not something you see every day. They own the technology, they own the content, they own the talent, they manage it on the back end. So it's not as if they're just selling something that was built from a third party provider. They have an ecosystem that they're managing themselves, and they're bringing that as a package to consumers. So pretty much it's a unique asset. A company like that cannot be financed purely by traditional financing measures. They need more patient capital. So they had to change their capital structure. They had debt, which has a maturity date. So you have to pay back the debt by a certain time. And companies like that need a longer time horizon to reach its full potential. And that is more appropriately aligned with equity capital, which is why they needed to raise equity by means of the IPO. And of course, private equity as well, because they did some private equity raises. But the point is, a company like that, for it to reach its full potential, would have to align the type of capital with the type of business that it's in. So the IPO would definitely be a move that would help the company to reach its full potential. So I'm not surprised either.
Okay, so I actually do have an update for you. I was mistaken. The JFP allotments are out, and it came out a week ago from February 28th. Don't know how I missed that one, but you know, sometimes you miss a few things. So let me share my screen. Both the JFP and the Edufocal allotments are out. So let's go over them right now, especially since I know a lot of you want to know about this. So this one is JFP. Is it JFP? Yes, this is the JFP allotments. So employee reserve pool got 100%, key strategic partners 100%, GK investments 100%. And this is one that most of us want to know about, which would be the non-reserve share pool. This is the public, people who were not employees, you don't have access to special shares. So members of the public who applied for JFP, you get your first 12,500 shares. So it was $1 a share, so basically $12,500 worth, plus an allocation of about 22.8% of the excess. So, okay, I can't do this math mentally. I wanted to, but I need pen and paper, and I don't have that in front of me right now. But yeah, you can work that out. So if you applied for $100,000, you get your first 12,500 plus 22.8% of the rest that you applied for. So you probably end up with maybe about $30,000 worth if you applied for 100,000. Yeah. So that's JFP. Those allocations are out. And let me now share my screen for the Edufocal allotments. And this came out yesterday, actually. So this one is a lot newer. So JFP came out from the 28th of February, which means that you should be expecting your refunds anytime soon. And here is Edufocal. So Let me just scroll to general public, which is what most of you want to know about. Edufocal applicants get the first 10,000 shares as their base allotment, so $10,000 worth because it's $1 each. Plus, you get about 16% of the excess shares. So a smaller percentage than with JFP, but this was a smaller offer as well. So you get your first 10,000 shares plus about 16% of the excess. And you can hear about refunds probably in the next week or so. So that's the update. That's the breaking money news here on Taking Stock regarding your allocations for the JFP and the Edufocal IPOs. All right, let's get into some results now. So we have a few results that have come out recently. Let's start with Stationery, Office and Supplies. Their results for the year ending December 31 are out. Dwayne, how did they do? SOS.
Right. Okay. Let me share my screen. Give me a second. Right.
Okay, I think it's about to come up. Yes, there we go. Make sure you zoom in for us.
Sure, no problem. Okay, let me just make sure. Seeing it clearly?
Yes.
All right, perfect. Okay, let me just, sorry. All right, give me a second. Okay. Right. Okay. So in terms of the financials, SOS, they did really well for 2021. Definitely a rebound from the previous year. Obviously, you know, I think has been a consistent thing discussing the pandemic and how that has affected business lines, but you know they were able to recover well, and we can see it in the numbers. So the revenue is up 16%, coming from 972 to 1.1 billion. They were able to keep their cost really. I mean, it's still a bit high, but they've been able to keep it relatively low compared to the revenue. Their operating profit is actually up 124% from the 54 to 123 million. And their net profits, which is really the highlight of the performance, is up 224% from 33 to 107.
224%. You can't say that so dry, man.
224%. No, but
That's a big jump in net profits.
It's a big jump. It's a big
so
jump.
What accounts for that? How were they able to get their net profits up by triple their net profits and more?
So SOS, the model didn't really change. They have been consistent with the services that they're offering. However, they took a big decision in increasing their inventory in anticipation for any potential shortages that would have come. And because of that increase, they were able to meet the market demand. I think what was peculiar with their financial this time, I'm just gonna carry it to page. I'm just going to carry it down a bit. When we look at the segment reporting, stationery and office supplies is really broken up into these three areas. You have your books, you have furniture, and you have other stationery and others, right? Now, for 2020, we see where obviously furniture was their most dominant business line, right? However, it took a pullback in 2021, and I think that was partly due to probably companies not needing as much furniture with the work from home policies, maybe arrangements that were in place for businesses to buy additional furniture fell through, so they probably took a hit in that area. However, when we look at their stationery segment reporting, we see where that had increased from 200 million to 614 million. So we're talking about well over 200%. right? So that definitely accounted for a big chunk of the revenue that they made. And also for their books, we saw where there was a increase in revenue for them in year over year. So those definitely played a key role in the profit, the revenue and profit that the company recorded this time around. What is interesting to me regarding stationery office supply is that they were a bit concerned about the fact that schools were closed. Obviously, business would be affected by that because kids aren't at school. So the need for books and some of their staple brands like Mead weren't. They were worried that there would be a lack of demand there. But given the announcement by the government and also them just anticipating that for 2022 the schools would reopen, I think it's very positive. The outlook for them is very positive, and we might see their revenue skyrocket into 2022, given that they've been performing so well in the other areas. So definitely a positive move, or at least a positive reality, I should say, for the company in terms of them being able to scale upwards even more. Another thing I wanted to highlight were some of their strategic moves last year. So not only did they beef up on their inventory, but they also decided to increase the range of products that they're offering. So they actually went into some of the product lines for home units that were a bit in demand for them. And they also have a strategic partnership with a US-based company, AIS, in terms of furniture, bringing furniture to Jamaica. So they've been playing well in the market in the sense that they're making certain moves, trying to position themselves for growth, regardless of obviously the pandemic and how their business would have been affected by that. And we saw that play out for some of their locations. So the Montego Bay location actually saw an increase in revenue. It was noted in the report by the board of directors, a 35% increase in revenue. So as you can imagine, it's a step in the right direction for the company. Everyone is looking to rebound, but when you can be profitable as well and see not only just being profitable, but seeing historic performance in the company, it definitely is it's a great sign for them. I think they actually noted that this was their second highest reported amount in net profit in their history. So as you can imagine, I'm sure they're very pleased with exactly. So they'll be very pleased with that performance. So it's a company that I was probably one of the stocks that I would have bought earlier on before I came to Ideal. So I like junior market companies because of the potential that they have in giving good returns for investors. Naturally, we always want to look at the company and how they're performing, but we also want to get into companies that offer us a good return on our investment. And Stationery SOS has really provided that for its investors. So I think moving forward, it's one to look out for to see how the company will build out into 2022.
Did you mention what their stock price looks like?
Their stock price, let me just pull that up for you. I think it's trading about 614, if memory serves right. Let me just pull up what it closed at today. Yeah, I can display it for you.
I can bring up my screen. Yeah, I'll share it.
Okay, sure.
Screen. Here we go. So it closed at $7.01 today. And that would be up from, so it kind of rose around mid-February. It was in the $5 and odd range, and now it's up in the $7 and odd range. That's the 3-month chart. Let me see what it looks like in the past 6 months. It's been up and down, but we're still looking at among the higher prices in the past 6 months. And for the past year, what will look like for SOS. All right, my thing here, freeze, is not showing me the year. Yes, here we go. Here's the year chart. Yeah, so a year ago, it would have been $4 and change. So you've seen significant gains over the past year in this stock. And based on the results, you are expecting a further increase. You think the market will react to this? Because the Jamaican market kind of funny sometimes, Sometimes they react and sometimes they don't.
with the Jamaican market, and I've said it to my peers on many occasions, when I think of the Jamaican market, we're unique in the sense that you can have a company that sees record profits and the market really just doesn't respond to it that well. You can see a company that recovers and outperforms expectations, and the market will be a bit slow to react to it. But at the same time, when we look at Wisynco, when we had discussed how they've been pivoting in the pandemic and how they've been scaling their business upwards and seeing how the market responded to it. I think what we can expect is that initial boom. Obviously, persons will look to buy into it, and that will drive the price, so that demand for it initially. But it always tends to peter down, or at least plateauing to what the true valuation or the true sentiment for the stock price would be in the market. So I expect it to increase. I definitely expect it to increase in value, not by that much, because based off of their PE right now, it's operating close to the market PE for the junior market. I think it's roughly about 16.3 for the 16.3 times for SOS, and the market is roughly at about 18.1 times. So when you compare where it is from where most where the market is operating at, there still is some room for growth.
And I'm looking at the
By that
volume. The
metric.
volumes traded are very small on this one as well. So just a few thousand traded here and there. In February, saw like 100,000, 300 and odd thousand, but still relatively small volumes on the stock on a day-to-day basis. So liquidity might be a part of the issue when it comes to trading this stock, since it is one of the smaller companies on the market. I have a question from one of the viewers who wants to know if Trevor wants to know if this company SOS pays dividends.
Right. So there is actually an issue with that. So they do pay dividends. However, their operating profit was not able to cover some of the expenses, including dividends. So they had to dip into their cash reserve to pay that out. But they do pay dividends. And that's something else that I'm also looking at for the company, that they will also improve their cash position, because it did eat out a large portion of it. It went from 96 million to 34 million year over year. So there definitely is a decline in how much cash that they have available. But with, as I said, with schools reopening, that increased demand for certain products that they're carrying, I would anticipate that 2023 will see a boost in the revenue for them, and it will improve their cash position over the next couple of months.
All right. Thanks, Dwayne. So, Julian, you've been taking a look at the results for Dairymon Trading, one of the larger companies on the stock exchange. They're listed on the main market. What are the highlights of their results?
Okay, so I'll share my screen. All right, can you see it?
Not yet. It's coming up, I believe. Yes.
I know you keep telling me
Yes,
if I
zoom
scale it the
in,
right
zoom
amount.
in.
All right.
Okay, you have a lot of information on this chart. So
All right, so we're just going to do a quick
the relevant
overview as
sections.
usual. So Dairymon has quite an interesting setup. So we're going to go through the structure of the company before we start talking about performance, because we need to put the performance into context. So Dairymon actually has a 65% stake in Caribbean Flavors and Fragrances. It's actually a listed company on the JSE. So they're into flavor and fragrance manufacturing, and it's exactly what it sounds like. So we're thinking about the raw materials for boxed drinks, ice cream, baked products, food coloring, sanitizer, etc. So these are things that would go into the things that we enjoy. And the manufacturers sometimes don't make all the things themselves. They would get it from our CFF to put it into their special concoction to give it to us as consumers. So the next company is Select Grocers. We might know Select Grocers from the Manor Park location. They actually own 60% of that. It's a wholesale and retail outfit. And what's interesting is that the company is going to expand the Select Grocers footprint by having a location in Clarendon by the Millennium Mall, and it's financed in part from the proceeds of the APO, which is estimated to be about 500 million Jamaican dollars. Now we have Woodcats International. The company owns 100% of that firm, and they are manufacturers of wooden pallets. They're based in Jamaica, and pallets are used for storage and logistics purposes in manufacturing. So basically, it's a wooden frame that the forklift picks up. So I have a picture of a wooden pallet, right? You see the forklift operator lifting up the wooden pallet here, just to give you some context. So normally the goods would go on top of the wooden pallet. So next, we have Marnock Retail, and that company operates the Food Saver franchise in the United States. They own this company 100% outright. They're based in New York, Brooklyn to be exact. And similar to that company is Marnock LLC, which Dairymon owns 80% of. And it trades as Good Food for Less LLC, also based in Brooklyn, New York. So both companies based in Brooklyn were purchased together for roughly $1.34 billion, financed in part by the proceeds of the $4 billion APO, right? The companies target African and Caribbean migrants in the New York tri-state area. And basically the deal, it took effect of Q1 of FY 2021, the first quarter, right? The companies were established roughly 23 years ago, so it's well known in that community. And what's interesting is that about 4% of Brooklyn's population is Jamaican. So that translates to 68,000 persons. So if they even get a portion of that market, they can get some steady support. What we find interesting also is that Africans tend to spend a larger share on food compared to Jamaicans. So it's a good market mix in terms of what they can get from that investment. And it's building on their knowledge because they have a similar business that they own, which is Sampar's Cash and Carry. They own 100% of that company. It's a wholesale distribution of grocery and various food items. And it's based in Jamaica, and they have 6 different outlets. And what's interesting is that they're saying the leadership of the company says that Sampars benefits from food remittances, in that many persons who live overseas will buy food online. They order food online from Sampars for relatives that are in Jamaica who can just pick them up. I found that to be interesting because I didn't know prior to the research. So Spicy Hill Farms is a new acquisition that the company made. They own it 100%. The company manufactures Ram Goat Soup brand. They produce crushed Scotch bonnet pepper for export markets, and they also have other products. And that deal took effect on the 10th of January 2022. That's when it was closed. And the company exceeded roughly 400,000 in US dollars, 400,000 US dollars worth of export sales in 2016, according to the Gleaner. And that would translate to $51.4 million in 2016 dollars. So the company is going to be relocated to a larger facility, which is more upgraded. So we can expect higher sales capacity because of that. And now in terms of brands that Dairymon carries, they carry Nestle. They're one of 4 regional distributors of Nestle. They own the SM Jaleel portfolio in terms of distribution. So they carry Buster, Fruta, Chubby, the Chubby Soda, etc. And they also have their own brand, which is Delect. So Delect comprises, the portfolio of Delect comprises canned food, ketchup, vegetable oil, etc. And they also carry Blue Power soap, cold storage products like chopped meat. For example, you want to order pig's tail and so on, you can get that from Dairymon as well. And they carry large volumes of rice, cornmeal, and other basic food items. So they have a very broad portfolio. And if you notice, the portfolio of holdings all complement each other. So they take it from the level of raw materials to production to distribution. So they have the entire value chain inside of Dairymon. And it's all basically focused on food items. So in terms of the performance now, we realize that distribution comprise 35% of group revenues, while wholesale and retail comprise of 58% of group revenues, while manufacturing was just 8%. However, what's interesting is that in terms of profitability, when we check the margins, the largest margin comes from manufacturing, and it seems to be an area that the company is going deeper into. In terms of the average margin, the company is operating at 4.4% in terms of operating margins, which is not abnormal for a company in this area. So that's not alarming. As we notice, the company has a strong product portfolio, so they should continue to be able to move strong volumes. Now, in terms of the revenue growth over the years, we notice that revenue growth has fluctuated quite a bit. They have
So, Julian, let's
36.
just skip to how the stock has been performing because we're running low on time now. So, talk to me about the stock price because they did do an APO in December 2020, which you referenced some of the things that the APO funds were used for. The APO price was at $2.20 for existing shareholders and team members, $2.40 for non-existing shareholders, for others. So, how has it performed since then?
Okay, so let's take a step back and look at the broader view, take it from different angles. So from a 2-year perspective, the stock has done roughly 43.62%, right? Getting that data from the Bloomberg terminal. Now, in terms of where it is now, it's $2.69. And year to date is up 16.96%. And it's down 15% from the 52-week high. But the multiple is a bit rich, right? Because we noticed that the stock ran up recently, and we'll also see the same kind of price action on the Bloomberg terminal. So we saw a recent run up, and it's beginning to pull back. The multiple of 33 times is a bit high because just doing a basic estimate of where it was over the last 3 years, the 3-year average multiple was 23 times. Right? The return on equity is about 9%. So we're saying that pretty much where the stock is right now, there might not be that much more upside in the near term. But if it's a situation where investors are able to buy the stock and hold it for a longer time period, they may be able to see greater value down the road. Because as we notice, there are many projects that the company is taking on, and that should have accretive gains that will boost the sentiment for the stock during a longer period of time. So maybe not in the near term, but in a longer period of time. We're talking about 12 months or greater. It could happen before then, but that is what we can speak of for sure, meaning that the company is actually building out its capacity and to be able to drive earnings for shareholders.
I have a question from one of the viewers. Robert wants to know, to what extent will the war or can the war affect Dairymon's need for raw material imports?
Very good.
If at all.
Very good. That's very good. We need that from investors. So I actually made note of that. So in terms of the Ukraine-Russia conflict and the sanctions on Russia, what will happen is that we will see a great shock on basic commodities. So we're talking about wheat, we're talking about other basic grains, and that will actually affect companies like Dairymon in that they might not necessarily import directly from Russia, but remember in economies, everything is connected. If 5 people supply something and one of them drop out, then the remaining 4 will have to supply everybody else, and that will cause the price of the remaining players the prices offered by the remaining players to go up. So pretty much we could see a squeeze on margins. But the flip side is that they sell products that are basically established brands. They are seen as necessities by Jamaicans. So they have some element of pricing power. So they're able to pass on some of those costs. So they might see a squeeze, but they might not necessarily be knocked out of the park because their portfolio is fairly defensive, meaning that they can withstand some of that shock. And they are very diversified. They're in multiple markets. They're in different segments. They have some raw material side of the business with CFF. They have some production side of it, so they can control the dynamic there. And they also control the distribution outlets for some of their products. So because of that advantage, the company will be challenged from the standpoint of rising raw material costs. But because of their positioning, they should be able to put up somewhat of a fight until things normalize.
Thank you, Julian. Thank you as well, Dwayne, for your analysis this evening. Much appreciated, and we look forward to talking again. So viewers, stay with us because in just a few, I am going to be whipping out my calculator and showing you how to calculate your allotment. So for those of you who this might have been your first IPO and you're excited and you want to know, okay, what was Kalila talking about with the allotments earlier? I'm going to work that out for you live here on Taking Stock in just a moment. So stay tuned.
The Analysts was brought to you by Proven Wealth and Ideal Securities Brokers Limited.
Hey moneymakers, you're not an official part of the family until you have your merch. Visit KalilaReynolds.com/store to order your t-shirt and your mask today. Let's get this money. And let me also remind you at this point to hit the like button if you haven't done so just yet. I want to see those likes up here on the program so that YouTube and Facebook can recommend this program to more people like you who need to know this information. Subscribe to the newsletter at KalilaReynolds.com/newsletter. You're going to get what's hot in business, as well as all of the budget highlights directly to your inbox tomorrow morning. We also send out a newsletter on Sunday. If you had subscribed before, you would have seen our promo code for the masterclass. Today is International Women's Day. How did I not mention that until now? Happy Women's Day to all my women and women supporters out there. I do have a special promo code valid today only, so you only have a few hours left to take advantage of it. If you had subscribed to the newsletter, you would have known about the promo code from Sunday. It was also on my IG today. So the promo code is $woman. All right. I'm going to put it in at the bottom of the screen. Let me ask my producer to put that at the bottom of the screen for me. The promo code for a 20% discount for the remainder of today only is $woman. You go to KalilaReynolds.com/masterclass and input that promo code. You will get 20% off on the masterclass. And this is very useful if you're brand new to all of this and you don't know what's going on. You're trying to figure it out. This is going to help you. The course takes about 90 minutes to complete, so you don't have to sit down there all day or weeks. You just get easily digestible information that can help you to learn the basics. All right, so let's walk through the allotments. Let me share my screen here and tell you how window. All right, let me explain how this works, yeah? So, are you seeing the screen? Are you seeing the screen? I'm not sure. All right, let me know in the comments if you're seeing my calculator app there on the screen. My computer seems to be moving a little bit slow. All right, good. Yes, you are seeing it. Wonderful. All right, so here we go. If you had applied for, let's say you put $100,000 on the JFP IPO, right? Let's put in 100,000 right here, right now. $100,000 is what you invested in JFP, and the shares were $1 each, which means that you bought or applied for 100,000 shares. Now, because there were so many people applying for the shares, they're not able to give you all the shares that you want, because they only have X number of shares and then X plus Y number of people applied for the shares. So what they decided to do is just give everybody some of what they wanted so that everybody can be treated equally and be able to get at least some of what they wanted. So you applied for 100,000 shares, for example, right? And the allotments now, let me see what the allotment was. It said all applicants from the general public pool will receive up to the first 12,500 shares. So what does that mean? Well, if you applied for $12,500 worth of shares or less, you will receive everything that you applied for. So if you applied for $5,000 worth of shares, you're going to get the full $5,000. If you applied for $10,000 worth of shares, you're going to get the full $10,000. If you applied for up to $12,500 worth of shares, you're going to get everything that you applied for. Now, if you applied for more than $1,500 worth of shares, here is how you calculate what you actually will receive. And in our example, I'm going to use $100,000. So first, you will subtract the 12,500, right? And this is what we're left with, 87,000, because we're going to put the 12,500 one side because you know you don't get that. You want to know how much more are you going to get. So we're left with 87,500. And it says that you're going to receive 22.8% of the excess shares, which means you will receive 22.8% of this. So how we calculate this on a calculator is by multiplying that by 22.8%. And a percentage converted to a decimal is going to be 0.228. That's 22.8% in a decimal. So you are getting 19,950 shares plus the 12,500, right? Computer freeze up again. So you're gonna get 19,950, and it's not giving me the 12 because it froze. Okay, here we go. Plus 12,500 equals 32,450 shares, which is $32,450 because it was $1 a share. So this, out of your 100,000 that you applied for, you're gonna get 32,450. And what will happen is that they will give you a refund for the balance. So the remainder, which would be what, like 67,000 change, $67,550, you're going to get a refund for $67,000. And then what you did get would be $32,450 out of the amount that you applied for. So whatever number you applied for, once it's more than 12,500, just follow. You can replay this video as many times as you need to. Multiply it by 0.228. That's 22.8%. And that is how you can work out your allotments. So multiply it by that and then add in back the 12,500. And then follow the same method for Edufocal. The only difference with Edufocal is that the base allotment for Edufocal is 10,000, and the allotment after that is, I think they said 16%. Let me stop sharing. Yeah, let me check what it was for Edufocal, 16.5%. So that is how you can calculate your shares. And I wish you all the best for the rest of the day. If you guys have any questions, let me know in the comments, in the chat. I still want to know, what are the highlights for you from the budget? Let me know in the comments. And of course, take our poll in the community section of the YouTube channel. Visit the community tab and let us know what your thoughts are. I'm Kalila Reynolds. It was my pleasure serving you for another evening. Thank you so much to my hardworking production team. Big up on yourself. You guys work so hard. And we see you again, same time, same place next week. We got a lot coming up this week. I'm going to be telling you some more about NCB Capital Markets Wealth Connect app. Have any of you tried it yet? I have used it. It is actually the first live trading app. The first trading app in Jamaica, because you can use Moneyline to trade online. You can use JTrader Pro to trade online, but those are websites, not apps. So this is the first app that actually allows you to do it. I've tried it out, and you can check out my video on that and my interview on that probably sometime this week or maybe early next week. We'll see. And there's lots more. Of course, we're going to be talking some more about CBDC as well, JAM-DEX. How does it work? And how can you get some? How can you be a part of it? That content will be coming up this week and next week as well. Well, we'll see you next time, same place. Like the video, subscribe to the channel if you haven't done so just yet. Subscribe to the newsletter at KalilaReynolds.com/newsletter, and take the masterclass at KalilaReynolds.com/masterclass. Use the promo code $woman for a 20% discount today, March 8th only. Enjoy the rest of your day. See you later.